Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 28th of November. Dollar opens on a weak note. The US dollar opened with negative gaps against its major counterparts on Monday and continued to trade even lower during the Asian morning, reversing some of its remarkable gains from the past weeks. Given the absence of any fundamental news behind the move, we believe that this may be the result of investors locking in profits from their previous bets in the face of a week filled with potential risk events. Even though this correction may continue for a while, the trend still looks positive. In any case, much will depend on November's employment data due out on Friday. Moving to the energy market, oil prices slid on Friday following news that Saudi Arabia will not attend talks with non-OPEC producers on Monday, aimed at discussing the production levels of each nation under a potential deal. What's more, WTI prices opened with a gap lower this week after the Saudi energy minister said on Sunday that the oil market would balance itself in 2017 even if there is no agreement, and thus keeping production at current levels could be justified. Coming ahead of the official OPEC meeting on Wednesday, these developments may have scaled back some market expectations regarding the likelihood of a finalized accord. In our view, given the continued unwillingness of major producers such as Iraq and Iran to curb their output, the bar for a sealed deal this week remains high. As for today's highlights, during the European day, Sweden's retail sales and Eurozone's M3 money supply, both for October, are due to be released. In the US, the Dallas Fed Business Activity Index for November is coming out, though no forecast is available. We have two speakers on today's agenda, ECB President Mario Draghi and Executive Board member Peter Praet. As for the rest of the week, on Tuesday we get Germany's preliminary CPI data for November and from the US the second estimate of Q3 GDP. On Wednesday, the much anticipated OPEC meeting will take center stage. Heading into this meeting, there is still disagreement as to which member states should cut and by how much, which casts doubts over the prospect of a sealed deal. Furthermore, we believe that the oil market is likely to remain oversupplied even if the production cut outlined in Algiers takes flesh. The cartel's latest monthly report showed that OPEC nations continue to raise their production in October, which suggests that members would have to reduce output by much more than previously if they indeed want to support prices. In New Zealand, the RBNZ publishes its semi-annual financial stability report. From Eurozone, we get the preliminary CPI for November, and from the US, the ADP employment report for the same month, alongside personal income and personal spending data for October, are coming out. From Canada, we have GDP data for the third quarter. On Thursday, from the UK, we get the manufacturing PMI for November, and from the US, the ISM manufacturing index for the same month. On Friday, the spotlight will be the US employment report for November. Expectations are for another month of solid employment gains, which may seal the case for a Fed hike at the upcoming gathering in December. We get employment data for November from Canada as well. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.